The Omicron variant has caused a lot of problems in the world. And what should you do about that with regard to your financial planning? That's what we're going to talk about on today's episode of Friends Talk Financial Planning. Hi, I'm John Shear, and I run a fee-only financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan-Mermel, and I have a fee-only planning practice in Chicago, Illinois.
Before we get started, one thing that I wanted to mention is to remind people to hit the subscribe button. When you subscribe to our show, it helps other people find us and get this information. So go ahead and hit subscribe. I'll wait for a minute until you do that.
In the meantime, I'll start asking you about the Omicron variant. John, this is all over the news, and I know that a lot of people are concerned about it. So, and I think the stock market even went down yesterday. We're filming this at the end of November. So what say
big
you?
news, right?
Yeah,
Couple 3% down. I mean, the biggest thing. And so for me, there's really two things that it comes down to, and it sort of circles back to some of the basics. But the first thing I tell people to remember is, number one, it's not a matter of if the market is going to go down. I had a conversation with a client, is this going to be a problem? Could this cause the market to go down? And the answer is, well, yeah, it sure could. But it's not a matter of if the market's going to go down. At some point, we're going to take a big dip. It's going to be down 10 or 20 or 30%. And this time it might stay down that for a year or two, who knows, right? But so this is what happens in the market. So whether it's Omicron or taxes or inflation, I mean, something's going to happen. And so being prepared and having your investment and your overall financial planning done in a fashion that anticipates. It's not like,
Right.
Hey, we avoid this stuff, right? Hey, it's going to happen. Is this the one? I don't know, maybe, but if you have yourself prepared, then it becomes less of a concerning issue when things like this do arise. So that's number one, is it's going to happen at some point, and then if this is the trigger, is just much less important. And then the other thing that I tell people is just to have some perspective on these long-term, money, your money that's in stocks is designed for long-term, and we're talking 5 years and 10 years, right? And if it's helpful for me personally, I have these same concerns, right? But you look back 10 years ago and 20 years ago, and where were the markets? What was the S&P at 20 years ago? And you say, oh, geez, my money that's as long-term, I'm not going to touch those stocks for 10 years. What's gone on back decades? You can see that, and you go, oh yeah, what do you think the market's going to be? I don't know, next year, maybe it's not good, but in 10 years, in 20 years, are things going to be better than they are today? Right? It's almost a guarantee. And so as you look at those things historically, so those are the two things that I talk with people about. What do you say when this comes up, Bridget?
Well, actually, the metaphor that I use is that I think the stock market, a lot of the operations of the stock market is kind of like the high school hallways that I grew up with. So the chatter in the hallway is really, who's in, who's out, maybe some joyous basketball news, or, like, what are you doing this weekend? But everybody just kind of picks up on the latest gossip and makes it overblown. And I would say that what's going to be happening in 10 years, it's kind of like, well, who would you bet on in 10 years? Well, I would bet on the well-balanced person, not just the person the chance of the person that's like a one-note person succeeding in 10 years after high school is lower. So the all-star athlete, the chances of them making it big are lower than the people who are more well-rounded. Not that that never happens, but the person who's most popular in high school isn't the most popular or most successful in life. Not 100% of the time. We're talking about big statistics, and I've gone to a lot of my high school reunions. And so, it's just something that I really enjoy, catching up with people. But you can see, like, okay, the people, like, what you think is going to happen with people isn't what's going to happen with people. So,
I love that analogy. I've not heard that one before. It's twice now you've been bringing up drug rate. But it's interesting that, I think something I gleaned from that is that when you're in high school and you have those little mini dramas, they're very real, right? It's not made up. Like, it's a big deal.
Traumatic.
And then you think,
if you're in the middle of
but
it,
again, you go 10 years down the road, you go, oh yeah, that's right. I remember that thing for most of those things, right? And so that really reflects on things today, is that's very real. Some of those feelings. It's not like, oh no, this isn't. But again, that longer term time horizon. And you made me think of one other thing that I do talk with people about, is that when we talk about how are things going to affect the stock market, is that most people shouldn't have all their money in stocks, right?
Right.
So in our language through the Alliance of Comprehensive Planners, we talk about stocks being like our crops out in the field, right? That's where we have growth. That's also where we take risk. And then we've got our cash reserves, our bond ladder. Those are the pantry items, right? Where that's that secure thing. And so, geez, if the market goes down 30%, not all your money goes down 30%, right? We've
Right.
got 20 or 40 or 60% of your money in really safe places.
Right.
And it's easy to forget that when you're reading the news about the market does
Right.
this, and you go, yeah, but golly, maybe half your money is in things that aren't in the market,
Right.
right? And so to have some perspective again on that and to keep that in mind can be really helpful as you think about these scary times.
Right. A well-balanced portfolio, just like a well-balanced person,
Yeah.
generally wins over the long haul. So with that, let's wrap it up. I'm Bridget Sullivan Mermel, and I have a family financial planning practice in Chicago, and I'm visiting John Shear today in Middleton, Wisconsin at his practice. We're both members of ACP, or the Alliance of Comprehensive Planners, where there's advisors all over the country who think and talk a lot of the same ways that John and I do.
So if you're interested in finding a planner near you, you can go to acplanners.org. And again, don't forget to hit subscribe. And with that, until next time.
Thanks.